Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, September the 24th. The year's 2019. Let's talk trading. Why you need indicators, part 2. Well, yesterday in part 1, I said reason you need indicators is because it makes life a little bit easier. They're more efficient than having to do things by hand, making these calculations. Today, I want to tell you another reason you need indicators is because indicators are not biased. Once you put that code in, that's it. That code's going to perform the same way day after day, week after week. It's not going to have any biases. If you say, because if A, B, and C happen, then you want to have a long bias, then the indicator is going to indicate long. And if something else happens, it indicates short. And if none of the conditions happen, it indicates neutral. It's going to do the same thing every day. Or, for example, they're also going to be more accurate. Rather than you have to guess, is that 2 or 3 pips away, it's going to tell you exactly to the pip to the point. So, second reason you need indicators are they are not biased. And one of the things they're not biased about is the risk and money management. So if you have a risk indicator or a money management indicator, it's going to tell you what that risk is. It's going to make that calculation and say, hey, based on what you decided you are willing to lose per trade, it's going to say, okay, this is where you put the stop loss. This is how many lots you trade. That way, if the stop loss is triggered, it's going to be within your risk parameter. That's key. Now, as you watch these videos, boys and girls, fellow traders, remember, they're for educational purposes only. And that your results may differ from mine. And always remember, trading is very risky. So if you need advice, seek it from an accredited financial professional. That way, when they lose your money, you know it was lost by somebody who was accredited. Let's take a look here at the weekly. We see the dollar yen's pushing further, making new lows today for the week. And we're 42 pips below the open, so anybody taking that weekly open cross trade is in the money. And we still have some gaps that haven't filled. 236 pips below the yearly open, but we're still up for the month by 122 pips. And you can see here we're breaking out of the range of yesterday. We barely broke out the top. Let's see, by about 2 pips, came right back in, came through that upper wick zone all the way through the candle body, entered the lower wick zone of the previous day's candle, and then bounced or shot right through. And we're still above the monthly open, still above the monthly open range, but as you can see here, it looks like we're right on the August low, the first day of August, that low. Coming back towards the inside bar area here. And once again showing through the wick zones. We only have 4 pairs above 100. Relatively quiet day, even though we did have some announcements. I think it was consumer confidence or something happened today. That's one thing you might want to do is before you retire for the evening, look to see what's on tomorrow's calendar. That way, if something's important, you can make sure you're in front of the screen in time, or you can close out your positions if you prefer not to go through a news day, not to hold through a news day, because you never know what could happen and price could move against you, wiping out profits. Okay, and you can see here we went through the weekly H1 lowest open, and it looks like we're going to set a new daily H1 lowest open in about 6 minutes here. And we might be able to see that before the video ends. Pivot point right near the open, no bias using the pivot. You can see we came up to the weekly open, had a close above, then cross below. Anybody taking that weekly open cross, it's paid off. You can see here we triggered in the short zone. Anybody taking that trade is also in the money. Now let me go back to the screen. So as I was mentioning about indicators, you can see here a lot of my dashboards have some of the same things. It's always price is in relation to something. In this case, the daily open. Here we have the close in relation to the pivot point, and the close in relation to the VWAP. So one of the things you can see, if you've got 3 reds or 3 greens, it's kind of like having 3 cherries on a slot machine. You can pretty much say, okay, well, it's kind of going that way. So for example here, it crossed through the VWAP in the last hour. So that would be 1, turning green. Then it crossed through the daily open, that would be 2. And it also crossed through the pivot point, so that'd be 3. That price is below. So it's like, okay, well, if price crossed below those 3, I guess price is going down. So that's one way you can use these indicators as opposed to having to do it by hand. Okay, you can see here we're moving up here in the rat zone. Just put in a new low. So you can see how the rat zone indicator shows this. Now, if you were to refresh it, then it's going to just draw the rat zone. It doesn't. This particular version just shows basically what the current rat zone is, not how the rat zone progressed through the course of the day. We saw we took out the pivot. We still have 3 missed pivots for the month, but looks like we might take out another one if price continues south. Price action, 3 ball at the top, red at the line, 3 ball at the bottom, looking for green at the line. Showing the wick zone again, using the wick zone indicator. Once again, an indicator. Do you need an indicator? Well, if you want to be efficient, if you don't want to waste time, so you have to define the word need. It's one of those things, what do you really need? And yes, you need an indicator because, see, it's going to perform accurately. You don't have to worry about the indicator. Is it going to plot the lines wrong? No, you coded it, you tested it, it's going to keep doing it. The only way the indicator fails is if the data fails. So here you can see price in and out of the wick zone here, in and out of the wick zone, in and out of the wick zone. And so how did I learn about this? Oh, that was an indicator that calculated the frequency distribution. And we'll get into that probably tomorrow or the next day when we talk about other indicators. Or maybe I'll discuss a little bit more today. You know, indicators right here, once again, you can see with accuracy what candles are green on what time frames and what candles are red on what time frames and how many in a row. And you can use indicators down here to switch time frames. Makes it easy. You can use indicators here, once again, tell you how much time is left in the bar. Oh, that reminds me, there was a trader having some problems, but I think we might have figured it out. It was really interesting. There's this one MT4 on the name. They have 5 dots after the pair name. I think when they implemented MT4 on their servers, they must have forgot to fill in a box or something, because it makes no sense to have like the USDJPY ... So it's causing havoc on the dashboard, and the dashboard wasn't set up for that. So I'll have to see if I can figure out some way to help them out. And you can see here with the Einstein line, this is when we open this trading profile. You can see here it's triggering a long. Whoops. And looking at the different wick zones here. So we've got the weekly wick zone. Price was in and out of that. Maybe if we shift down to H4, we can get a little bit. So this was D1 high, D1 top here. You can see price today was here. This was the weekly wick zone from 1 week ago. Shift over to weekly candles. You can see that right here. So it was in that wick, out of the wick for the weekly, broke through the low. I think we showed that on the first screen. But this gives you indication showing, once again, using this indicator to show the wick zone, how accurate it is. She's putting in the top and the high. No big deal there, but would you want to have to do that by hand each time? No. Is there any bias here? No. I mean, we might, as traders, have a hedge. Well, maybe we'll just fudge with the lines a little bit. And that's something else. If you are trading, you are not tinkering. If you're tinkering, you're not trading. What do I mean? If you're constantly changing things on your screen or tinkering with the indicator parameters, you're tinkering. You're not trading. Trading should be consistent, day after day after day. It should be boring. If you remember one of the first screens, what do I have there on one of those first screens? Repetition. You should do the same thing over and over and over again. You don't need to change. You might need to read the market, but you don't need to be changing. I mean, the rat zone indicator's been around, I forget, has it been a decade? The buy zone's been over a decade. The wick zone, I think, was somewhere around 2013 where I developed that. There hasn't been changes to these because there's no tinkering. And for the range today, 56, and for the week, 56. As you can see here, this was yesterday. This here, the gray, is shading in the first day of the week's range, and you see we poked out here, and then we poked out of the range there, giving us the weekly range of 56. So once again, in this particular indicator, you can see how it calculates the daily open plus half of the ATR6 and half of the ATR4, which was the min and max ATR between ATRs 2 ... up to ATR 14. So, fellow traders, just remember, as you're trading, it's not what you trade, it's how you trade it. So drain the banks and come down here if you haven't already and hit the subscribe button.